Very good. The recording is in progress. Welcome, everybody. Steve Coburn here with Darren Hardison, my right arm for the last 15 years. Financial planner, life insurance underwriter, overall great person. And we have Charlene here, who is the backbone of this organization. And we're going to talk today more about the magic of life insurance. In particular, let's talk about term insurance conversion. It's a popular thing. It comes up. It's always a question when people buy life insurance, and we should learn a little bit about what it's all about. So, Darren, why don't you start off by explaining to us when somebody says, Darren, should I convert my term insurance? What exactly are they talking about?
Yeah, thanks, Steve. First off, I would say shame on us. We do not talk about this nearly enough, nor do we stress when we help someone get a new term life policy that chances are, now there's a handful that don't, but 95% of all new term policies actually have a conversion clause inside the language of the policy. And just for an education purposes, what that means is there's a contractual right within the term policy. For instance, we buy a 20-year term policy. We understand that we're going to have that policy for 20 years as long as I pay the scheduled premium. The insurance company can't cancel me. Then at the end of 20 years, we're off to look for another policy. However, within the language in these term policies, which probably nobody reads, and shame on us, we don't remind them. But when it comes up, it's incredibly powerful. The insurance company gives the insured a guaranteed privilege, regardless of insurability, to convert that term policy to a given permanent policy in their product portfolio. So what does that mean? And we've dealt with some recently. Excuse me. So client maybe is in the 17th year of their 20-year term. Maybe they've had a change in health. They were issued on a preferred basis or a favorable standard basis. And since that time, maybe they had an incident of cancer or heart or something. It doesn't have to be, catastrophic, but they're just not as healthy. So going out into the marketplace and getting a new policy, number one, they'd have to qualify. Number two, chances are it's going to be radically higher than this conversion that's going to be converted at that healthier rate classification. So let's stop there for a second.
No, I get that. All right, so the issue is insurability,
Mhm.
meaning being able to qualify for the lowest possible rate. And you're saying that two of the concerns people have are one, qualifying at all. I
Mhm.
mean, I've seen people, unfortunately, during the course of um, their insurability period, when they have insurance to cover a mortgage, to cover the family security and things like this, they do get sick. I had one client who became a quadriplegic. I mean, things do happen. So, will they qualify for a new coverage at all? That's concern number one. And number two, as you mentioned, even if they do qualify, will the rate on a new policy be higher or lower than the rate the company would charge for the conversion policy? So you're saying that very often, if unfortunately they do have a high risk factor, be it medical or lifestyle, the policy that the company would offer without any underwriting would be
Yeah.
cheaper than a new policy from another company. That's basically the upshot, right?
Yeah, and to go to part two of my explanation, where the real power is when someone's health has deteriorated to the point where it's either prohibitively expensive or they're no longer eligible for insurance. We had a case, as you know, recently, um, with that very scenario. They purchased the policy as a term, thinking, okay, I'm going to need this policy to protect my income stream during my working years, and then later in life, prior to retirement, they dealt with this medical issue, which wasn't terminal, but they understood it was going to drastically reduce their lifespan. Um, and they were kind of in a weird gap where that term was going to expire, not to sound morbid, but expire before the client did. And he understood that he needed that coverage, guaranteed coverage for an extended period of time. In this conversion, which, to reiterate what you said, is it's literally no health questions, no underwriting, a 2-page form. It's just a transaction, and the company stamps out a new policy. Another thing we should mention, we see this a lot too. So, the client was issued $1 million term policy. Well, oftentimes in retirement, you don't need as much coverage, correct? You have different needs. You still have some needs, but maybe you don't need the million. Well, same scenario. Their insurability changed, but they still needed 250. They wanted to carry 250 throughout retirement just to have liquidity for their estate plan, what have you. So same thing. We converted. And the client was happy. Without that conversion, they wouldn't have had any options to carry life insurance. So it's powerful in that regard.
All right, so you're talking about options for the conversion, and you're bringing up an interesting point. If somebody has 1 million, 2 million, whatever it is, of term insurance, and they need less after 20 or 25 years, they don't have to convert the entire term
Correct.
policy. You're saying
Yeah.
it could be a partial conversion,
Mhm.
and they could decide what to do with the balance. They could drop the balance, and depending on their age, they could convert it in stages.
Yeah.
Due to budgetary constraints, they may want to only convert 500 now and then 500 when their cash flow is higher in a few years, type of thing, right?
Yeah. Yeah. And the keyword here is options. When we talk to clients or prospects up front, we're always talking about options. Options are powerful. Then you're not regimented, you're not dictated, meaning, well, if this happens, newsflash, life throws us curveballs. Things happen, things change, our financial circumstances, and change for the better, they change for the worse. So having this flexibility inside a life insurance policy is huge. And it's something built into the policy. There's no charge for this. Again, like I started with, why aren't we talking about this more? But really, when it does come up, well, you and I talk about it, like when we do annual policy reviews. Hey, just a reminder, if you need permanent insurance, don't forget there's a conversion privilege. And to kind of go along those lines, when there is a conversion, we'll always compare that conversion pricing to going out into the market and buying a new policy, assuming the person is amenable to going through underwriting and doesn't mind, the application and, the exam and lab work. Again, there may be a new policy. Companies build more efficient policies. That's fine for somebody who still has good health. But more times than not, we see where let's just say their health has changed. It's deteriorated, which happens with age. And, having this safety net of a conversion it's pretty cool.
It is. And you mentioned that the conversion privileges is part of the contract when somebody buys it. But
Yeah.
isn't it, it's true, though, that not all term carriers um, have an inventory of permanent products to convert to.
there's, I always hate to say every and all, but most every company is going to have some conversion product. Now, some companies, maybe they only let you to convert to like a whole life, like a cash accumulation product, which may not be necessarily what the client's looking for. However, given their circumstance, it's still providing them the death benefit that they need. Again, to backtrack now, if they still have favorable insurability, then yeah, maybe we go out and find something else. And, like we say, all insurance companies are the same. They just do things differently. Certain companies may have better conversion products. So on the front end, as we're micromanaging things, if I'm showing a quote to a client and it's AIG, Prudential, and Transamerica, I know Prudential allows you to convert to any of their products, their permanent products, and they always have, and they always will. So that's maybe something we say, well, if the price is similar, let's secure a term product that has the better conversion options. And along those lines, not really the topic for the day, a few companies have started to introduce excuse me, term products without a conversion option. They, if they could shave the price down a little bit, again, they're trying to be competitive in the marketplace. So they say, well, our term pricing is a little bit less than everybody else, so we can sell more term products for that person that doesn't care about the conversion privilege. We don't sell those because they should care, and the price is so insignificantly less in most instances. We strongly recommend against buying a term product without a conversion privilege. It just doesn't make any sense because you can't, predict the future as far as what you'll need.
I get that, and I think that right. It's the small amount of savings is not worth it, and I think that a lot of this boils down to knowing your client.
Absolutely.
From 2 points of view, knowing your client from their insurability standpoint and knowing your client from their financial future. From an insurability standpoint, if we have a client that does have a higher risk factor and it's the kind of condition that might be permanent, this is a person who should be thinking more about conversion than somebody that doesn't have that condition. Simply because it's going to be harder for them to qualify for a well-priced policy later on if they need to continue coverage. In addition, it also occurs to me that when we have clients that have a family history of certain diseases, like, I remember a client where she had a history of lung cancer, breast cancer, as did her mother, as did her mother. Breast cancer pops up in certain families, just as other diseases pop up. And this is, again, is a person who should be concerned about qualifying for life insurance later. If they buy 20-year term and, oh, sorry, I need life insurance past the 20 years, it might be prohibitively expensive for them to go to market. So that's the kind of person who should be thinking ahead to preserve their insurability.
Right.
But also from a financial planning point of view, if we get a referral from a financial coach or from a financial advisor like an accountant or an attorney, I like to be able to depend on these folks to get an idea of what are the long-term financial needs of this particular client. If it looks like they might have a need for life insurance past the current stage of securing the young spouse and kids type of thing, conversion should also be in the mix there. That should be one of the specifications of the new insurance policy.
Yeah, and like you
Yeah.
introduced me, I'm a financial advisor, so I'm passionate about life insurance. I love it. I started with an insurance company. I grew up eating, sleeping, breathing life insurance, and then progress to full financial advising. So I always look at big pictures. You and I, we'll get a client that's maybe looking to protect a certain need. I think we're pretty good at helping them step back and look at the big picture. So we don't, sell product per se. We're really trying to help them address their overall financial planning, needs as far as the protection piece.
That's true. And one of the questions I ask now is if I have somebody who's, let's say, in their high 30s, 40s, maybe towards 50, I'm asking them, what kind of shape are your parents in? Your older parents. And if the answer is along the lines of, well, not too good, unfortunately, my father's got this, my mother's got that. And I'm like, well, is it possible, do you think that they might need some care later on? And is it possible that they might have to lean on you financially at some point? And if the answer is close to a yes, I'm like, all right, this is a person that needs long-term coverage.
Right.
It's not just a question of providing financial security for children that are dependents, but it could be a question of supporting parents that become dependents. And that happens a lot these days. So that's just an
Yeah.
example of long-term thinking.
Yeah, no, 100%. I always encourage people to think long term, with the understanding. Obviously, cost is always a factor. We appreciate that and we're sensitive to that. But I always say, look, at any time, we can make adjustments. On an annual basis, we're going to have a conversation, and I'm going to say, "Hey, how you doing? Has there been any material changes, personally or professionally?" And that's the whole purpose of us having a relationship is it's not a one and done thing. So whatever we do today doesn't mean that we have to keep that for 30 years, or
That's
it
right.
doesn't mean next year we say, oh, you know what, that seemed like the right thing, but let's do X, Y, or Z. So that's really the big thing.
That's exactly right. And by the way, we have a question from Dee,
I saw
our
that.
friend and coach. Dee's asking about really is there a substantial difference in term insurance premium between a product that has a conversion option and a product that doesn't? We keep talking about it not being much. I mean, we're
I would
actually
say,
talking about dollars, right?
I would say in percentages, you're probably within a couple percentage, premiums, 5%, 4%. With that said, if I go into our software, again, we're brokers, we represent every company under the sun, that's, has strong financial ratings. If it pulls up the top 20 term rates for a 20-year term, 19 of those products have the conversion. So the non-convertible term is still somewhat of a rarity. You just don't see it. Now, the companies that offer it, they kind of tout it, saying, "Hey, we can save you some money," and which may or may not be true because their underwriting might not be as competitive. So it's all, it's why you work with people like us, is to kind of help you sift through all the noise. And again, I'm not saying never in a million years would I sell a client a non-convertible term. I just think it's kind of silly for the minimal price savings.
I get that. And you raise a good point, which is from the consumer's point of view, it's one thing to be quoted the lowest price. It's another thing to qualify for it.
Mm.
It's not a shoe-in. And that's why, underwriting is the key. And that's why I refer to us as hunters for good underwriting, because that's what makes or breaks. That's what provides the value in a life insurance policy, whether you're going for the lowest possible cost or the highest possible cash accumulation. If we can get somebody really good underwriting
Yeah.
and can really control the cost of the insurance, then whatever strategy they employ, they'll get the best value.
Yeah, real quick, Steve. I know we're running out of time here. Just another interesting conversion story, and this was one that we just did a couple months ago, and the the client was an attorney, just busy, always in court, always with clients, always. It was hard for me to. I think I'd been chasing her for 2 years to. She's like, Darren, I get with you. I'm busy. Da, 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 da. she ended up converting her term to a permanent merely because she didn't have time to slow down and do an application and to sit for an examiner. Not that it's that painful. We're not discouraging people from applying for insurance. Fortunately, it was a company that had a good conversion product. It was competitive, and her health probably changed a little bit. She probably gained a little weight, and maybe she had this or that. So for somebody like that, it was perfect. It was just,
Right.
oh yeah. And she's like, well, I only needed, her situation was, the firm, she was the primary rainmaker attorney for the firm. Her parents owned the firm. If something happened to her, the firm would have a hardship. So she needed coverage, maybe only for another like 15 years or so. So we dialed in this
Right.
permanent product that was guaranteed for 15 years. Again, with permanent products, if something changes, we can go in and restructure it. We could stretch it out to age 100. So just cool things. But to close our conversation here today, without that conversion privilege, I don't know that she ever would have done it. She just, yeah.
And she would have run out of coverage that she still
Yeah.
needed.
Yeah.
All right, let's wrap up. We have one final question from D. Can you see it, Darren?
Yeah, I got it.
All right. If somebody has a 20 or a 30-year term and their health changes mid-course, let's say after 10 years, is it their responsibility to notify the provider? And if they did unfortunately pass away, would they still get the coverage expected? So they call this what, Darren? Underwritten at time of application, right?
Yeah, no, you're good. Your client is good. If they were issued a policy, the company understands that they could have a change in health if the underwriter did a good job and they didn't see anything that broadcast an issue at the time. Yeah, the person is covered for as long as the policy lasts, as long as they stay in good standing and pay the premium. And yeah, there's no notification process or anything like that.
This is why I consider life insurance underwriting to be the most vigorous of all the financial products because they have one shot at you. That's why they look at current health, past health, family history, legal record, financial record, driving record, all the various parts of your life that can touch your mortality. It's so exhaustive. And that's why pre-qualification is key, because we address all that up front so that when we finally find a carrier that's competitive, we know what the rate's going to be. But yeah, they got one shot at you. So fortunately, the life insurance industry is old enough so that there's mountains of actuarial data to back up their decisions. So even though an underwriter gets one shot at underwriting you and your life, they have enough data to feel very comfortable making competitive quotes. And that's why I tell people, you can turn from a couch potato into a chain smoking, bungee jumping mercenary next year. And if you have no plans to do that when you apply, they're stuck with you. And it's happened. It has definitely happened.
Yeah.
All right. I want to thank everybody, especially you, Darren, for once again your articulate answers. Thank you, everybody, for attending. We will be posting this for those who had to leave early. It's going to be on the website by tomorrow or so. And please stay tuned for our future programs. Have a good rest of your day.
Yep. Thanks, guys.